Hello everybody, my name is David Duncan. I'm with Carepath Benefits and I am surrounded by buckets, as you can see. We as a company don't feel like there are enough trick shots happening on LinkedIn. So, you see them all the time on Facebook, Twitter, whatever, but you never see it on LinkedIn. So today we're going to do some trick shots that are pretty cool. I'm just kidding. We're going to talk about something much more exciting than that, and that is level funded health insurance. So I know, hold on, it's going to be an exciting ride. So actually we at Carepath Benefits offer only level funded health insurance plans, and we wanted to just do a very basic high level explanation of how a level funded benefit plan works. In future videos, we'll get into kind of the mechanics behind it, some more of the boring stuff, and what actually, how money moves and all that stuff. But today we're just going to keep it super simple. I'm going to use these buckets to try to explain it in a very simple way. I know when I was new to the industry, people use the words level funded, self-insured, fully insured, and I had no idea what the difference in those was. I always, at my former jobs, had always had insurance, and I didn't really understand how it worked. But now that I know, I think it might be helpful for potentially some brokers who don't know a lot about it, or also employers, CFOs that maybe this will be an option for them in the future. So hopefully it'll make sense. If you can hang on with me for a couple minutes, we'll do our best. So. Level funded is simply that. It's a level. It means that the employer group signs up for a health plan and pays 12 level premium payments to what's called a third-party administrator, or TPA. And that TPA then takes that premium and puts the money into 3 different buckets, essentially. So we're going to talk about these buckets and how they work. Again, not going into detail. But we want to make sure to keep it simple and that it's understandable. So today we're going to cover that. I'm also going to talk about what are some of the benefits of a level funded plan, and then also what types of companies or businesses this might be a good fit for. So what kind of companies would benefit from this? Just on a very basic level, when a group writes a check to the insurance company, in this case, it'd be the TPA, the third-party administrator, handling their plan. The TPA would put the money in 3 different buckets, that premium money. So the premium money goes into 3 different buckets. The first bucket we call the claims fund. The second bucket is reinsurance, also known as stop-loss insurance. And then the third bucket is the administration. So claims fund, to just briefly describe that as a fund, part of the premium goes into, and then the TPA will take money out of that fund to pay claims. So very, very basic. So one of your employees goes to the doctor and there's a $50 claim. That provider then sends the claim to the TPA. The TPA then pays that claim from the claims fund. So this is the group's money that they're putting into. You can look at it as maybe a savings account or something like that to pay for claims that incur. The second bucket is the reinsurance, or the stop-loss insurance. So this is coverage that kind of sits behind the claims fund and protects it. And so it's backed by a carrier, and that carrier will kick in those funds when necessary. So let's say one of your employees gets in a car accident and it's a big claim, it's a $500,000 claim, and there's not enough money in the claims fund to cover it. That's when the reinsurance kicks in and protects the group and makes sure that claim can be covered. And then lastly, the administration bucket. This is kind of the boring stuff. This is, goes to pay the provider, it goes to, the network. It goes to pay for administrative fees for all that customer service your plan gets, and that TPA services. So that's what comes out of that bucket. So that's kind of the basic structure. 3 buckets, 3 ways your money's being used, that premium payment's being used, and that's it for those. So some of the benefits of a level funded plan is that, number one, the group is not paying more than is necessary for their health insurance coverage. So that's a huge benefit, can be a huge savings. Oftentimes, level funded premium is lower than a fully insured plan because the group has been rated based on their health, and those premium amounts are set based on what the carrier believes the group will need in insurance. And so a lot of times it can save the group money. It puts the group in better control of their insurance plan. It gives them a more transparent look based on reports that are provided by the TPA, and it helps control costs. So there are numerous benefits. A couple of the things we offer here at Carepath is a prescription pathway program. It's kind of value add stuff. Prescription pathway program, benefits navigation program. And so we offer services that keep us involved with each member's coverage and allows us to keep those costs down for the employer group, so that hopefully next year when you renew the plan, the premiums will either stay the same or become lower depending on the experience of your group. So types of businesses this is good for, really it's easy, it's any business. Here at Carepath we tend to focus on smaller business, so smaller businesses anywhere from groups with 2 lives all the way up to groups with 100 plus lives. And so level funded or self-funded insurance used to be this insurance that only big companies with big pockets could afford, and that's changed. Plans like ours allow smaller companies to get in the game, to pay cheaper premiums, to better control their health cost spend, and just to have a better, well-rounded engagement with their health insurance. WellNet did a survey of over 250 brokers and insurance agents, and 98% of the respondents came back and said they believed that a level-funded strategy would be the best fit for their group. So that's 98% of brokers thought this type of plan would be the best fit for their group, but also revealed is that only 60% of businesses, something like that, knew what level funded is or were ever exposed to it. So that's all I'm going to cover today. I hope it helped. I hope these videos have helped that we're putting out in this content. If there's something you want us to talk about, feel free to reach out. Feel free to connect with us on LinkedIn. David Duncan. We also have a company page, Carepath Benefits. You can go to our website, carepathbenefits.com, and find out more. Feel free to reach out. Thanks a lot.